How banks treat you at every level of wealth. Banks don't treat all customers equally. They will never say this out loud. The marketing materials use words like valued customer and committed to your financial well-being and here for every step of your journey. The branch employees are trained to smile at everyone. The website looks the same whether you have $47 in your checking account or $47 million in a managed portfolio. But the experience, the actual lived experience of being a customer at a bank is completely, radically, almost offensively different depending on how much money you have. The fees are different, the interest rates are different, the people you talk to are different. Whether you wait on hold or someone picks up immediately is different. Whether the bank makes money off you or the bank pays to keep you is different. The entire relationship, what it costs, what it provides, who initiates contact and why, flips completely somewhere between the person with nothing and the person with everything. This video is about where those flip points are. What actually changes at each level of wealth in how the financial system treats you. Not as a complaint, not as a conspiracy theory, as a clear-eyed look at a system that is working exactly as designed, and that most people don't fully understand until they've lived through several levels of it. The design is this. Banks extract value from people who have less and compete to serve people who have more. Everything else follows from that. If nobody has ever broken this down for you before, subscribe right now and hit the notification bell. We cover the hidden mechanics of money and how the financial system actually works, not the version in the brochure. Like this video, leave a comment about which level surprised you most. Now let's get into it. Level 1. Less than $1,000. The bank is not on your side. You have $340 in your checking account. This is your checking account, the only account you have, because when you tried to open a savings account last year, the banker mentioned a minimum balance requirement, and you quietly closed that tab. Your bank charges you $12 a month to have this account. Not for anything specific, just for having it. A monthly maintenance fee, waived if you maintain an average daily balance of $1,500, which you cannot, or if you receive a direct deposit of $500 or more, which some months you do and some months you don't, depending on your hours. On the months you don't hit the threshold, the $12 disappears from your account like a quiet tax on being poor. The overdraft fee is $35. You've paid it 4 times in the last 8 months. Once because your electric bill auto-drafted 2 days before your paycheck cleared. Once because you forgot about a subscription. Once because the math was fine on Sunday and wrong by Tuesday. Once because of a fee that triggered another fee. Each time your $340 balance became a negative number. The bank extended you an involuntary loan of somewhere between $4 and $23 to cover the transaction, and then charged you $35 for the privilege. The effective annualized interest rate on a $12 overdraft covered for 2 days at $35 is somewhere around 5,000%. This is legal. This is normal. This is the baseline experience of banking in America if you don't have money. You call customer service when you have a problem. You wait. The average hold time at major retail banks for standard checking account customers is between 8 and 22 minutes. When someone answers, they read from a script and have limited authority to do anything except process what the system allows them to process. You have, in the bank's internal classification system, a customer profitability score. It is negative. You cost the bank money and overhead, the branch, the ATMs, the call center, the technology, and you generate minimal revenue from the products you use. The overdraft fees help offset this. So does the interchange fee the bank collects every time you swipe your debit card. You are not a valued customer. You are a marginally profitable account that the bank tolerates because acquiring new customers is expensive and because regulations make it difficult to be openly selective. Nobody at the bank is thinking about how to help you build wealth. Nobody is calling you with opportunities. Nobody knows your name. You are an account number with a negative profitability score, and the bank is extracting what it can. Level 2. $1,000 to $10,000. The fees stop. Nothing else changes yet. You've gotten your balance above $1,500 consistently enough that the monthly maintenance fee has stopped hitting. This feels like progress, and technically is, though the bar it represents, not paying a fee to have a checking account, is genuinely low. You've opened a savings account. It earns 0.01% interest annually at your big national bank, which means your $3,000 in savings generates 30 cents a year. When you noticed this and looked up what a high-yield savings account earns at an online bank, the difference made you briefly angry. You moved half the savings. The big bank didn't notice and didn't call. The relationship with the bank at this level is essentially transactional and impersonal in both directions. You use the ATMs. The app works fine. You deposit your paycheck via mobile deposit on payday because you figured out you don't have to go to the branch anymore. Occasionally, someone from the bank calls you. When you answer, it is always someone trying to sell you something. A credit card with a rewards program, a personal loan at 18.9% APR, a savings product that turns out to have strings attached. These calls are not from someone who knows you or your situation. They are from an outbound sales team working a call list, following a script, tracked by conversion rate. Your credit card, if you have one from the bank, charges between 19% and 26% interest on any balance you carry. The rewards are real but modest, 1.5% cash back, or points that are worth slightly less than the marketing implies. The card is fine. It is designed to be fine, and occasionally more profitable than that if you carry a balance, which the bank's models suggest a certain percentage of customers at your income and balance level will do. You are not mistreated at this level. You are simply invisible. A background customer generating modest fee revenue and interchange income. Not important enough to have a relationship with. Not problematic enough to worry about. The bank is not your partner. It is a utility you use. Level 3. $10,000 to $50,000. The first upgrade nobody told you existed. Somewhere in this range, the exact threshold varies by institution, your bank's internal system reclassifies you. You might not notice this directly. You won't receive a letter. Nobody will call to congratulate you. But if you pay attention, things shift slightly. The hold times get a little shorter. If you have a problem and you push back on a fee, there's a higher probability that someone waives it. When you walk into a branch and mention you have a question about your account, the conversation is slightly warmer and slightly longer. You've been pre-approved for products with better terms, a credit card with a higher limit and better rewards, a home equity line of credit at a reasonable rate if you own property, a personal loan at 11% instead of 19%. Not great, but not predatory. Here is the thing about this level that most people don't realize. You are being noticed now. Not because the bank suddenly cares about you, but because you have crossed the threshold where the math changes. A customer with $35,000 in deposits is statistically more likely to take out a mortgage, take out an auto loan, invest with the bank, add a spouse to the account, refer family members. The lifetime value of this relationship is real, and the bank's retention systems are beginning to factor you in. The mortgage experience, if you buy a house at this level, is your first real taste of how banks treat customers with something to offer. The loan officer is professional, thorough, focused. They want your business. They will work with you on the rate, explain your options, call you back the same day. Not because they like you, because a $350,000 mortgage generating 6.8% interest for 30 years is an asset worth competing for. You are still in the mass market, but you are approaching an edge. Level 4. $50,000 to $250,000. Preferred. In name, if not entirely in practice, the bank has a name for you now. Preferred client, priority banking, select, gold. Whatever the brand calls it, Chase Private Client starts around $150,000 in deposits and investments. Bank of America Preferred Rewards has tiers that unlock at $20,000, $50,000, and $100,000. The names differ. The underlying logic is the same. You get a phone number that isn't the main customer service line. When you call it, someone answers faster, sometimes immediately. The person who answers has more authority to solve problems without escalating. They can waive fees, reverse charges, adjust terms, within certain limits. They know your name before you say it. They've seen your account history. Your credit card is better now. The rewards rate is higher. The annual fee, which exists, is offset by travel credits and other perks that actually reach positive value if you engage with them correctly. Your mortgage rate, if you have one through the bank, is slightly better than what a walk-in customer would get. Relationship pricing is the internal term. Loyalty has a discount. But here is the honest reality of preferred banking in this range. The person assigned to your relationship is managing between 200 and 500 accounts. They know your name on the phone because the screen told them. They are not thinking about your specific financial situation between your calls. They are not proactively identifying opportunities for you. They are reactive, available when you reach out, professional when you do, genuinely limited in what they can offer compared to what exists at the next level up. You have been acknowledged. You have not been embraced. The private banking door is visible from here. You can see the outline of it, but you haven't been invited through yet. Level 5. $250,000 to $1 million. The door opens, slightly. At $250,000 in investable assets, most major banks begin to offer you something that feels meaningfully different. A dedicated relationship banker. Not a call center rep, not a branch employee. A specific person with a name you'll remember who handles your accounts and is your point of contact for everything. They call you. This is the inversion. Up until now, you called the bank. Now the bank calls you. Quarterly, usually. Sometimes more often if something in the market is relevant to your holdings, or if there's a product the bank thinks you'd qualify for and benefit from. The call is professional, brief, and contains a mixture of genuine helpfulness and institutional agenda. They're also, always, looking for opportunities to deepen the relationship. Your money is working harder for you now. The savings rates you're offered are better. The investment products you're shown are more sophisticated. If you have a mortgage, your rate is materially lower than what a stranger would get. If you need a loan for something unusual, a bridge loan, a business line of credit, something that doesn't fit a standard product, there is actual flexibility in the system to accommodate you. The fee structure inverts further. Many fees are automatically waived at this tier. Overdraft? Waived. Wire transfer? Waived or discounted. Foreign transaction fees on the credit card? Gone. The bank is now paying to maintain your relationship rather than extracting from it. The word that starts appearing in how bank employees talk about people at this level, in training materials, in internal communications, is relationship. Below this level, you are a customer. Here, you are a relationship. The distinction matters because relationships require investment to maintain, and the bank is now investing in you. What you don't have yet is the experience that comes with true private banking, the customization, the access, the level of service that doesn't feel like service at all, that feels like having a team of extremely competent people who are genuinely interested in your financial well-being because their professional success is tied to yours. That starts above $1 million. Level 6. $1 million to $5 million. Private banking. The world changes. The private banking division of a major institution, J.P. Morgan Private Bank, Citibank Private Client, Goldman Sachs Private Wealth Management, the equivalent at every large bank, is not the same product with a fancier name. It is a structurally different service tier with different staffing ratios, different products, different authority structures, and a fundamentally different philosophy about what the relationship means. Your private banker manages 30 to 80 clients, not 200, not 500. 30 to 80 people whose financial lives they know in detail, whose goals they are actively working to advance, whose calls they answer directly from their cell phone. And they give you their cell phone number. This small thing carries weight. When something happens, a market event, a liquidity need, a question that can't wait, you call a person, not a line. You get a voice, not a hold queue. The person who answers knows your situation without you having to explain it. The products available at this level are different in kind, not just degree. You access investment opportunities that are not available to retail banking customers, private equity allocations, alternative investments, structured products designed around your specific tax situation, real estate investment trusts with institutional pricing. The interest rates on your borrowing are dramatically different. Margin lending against your portfolio at rates that retail customers are not offered, because retail customers don't have portfolios large enough to make the product viable. Your accountant and your private banker begin to coordinate. Your estate attorney gets pulled into conversations about your deposit structure and beneficiary designations. For the first time, the bank is not selling you products. It is building solutions. The solutions fit your situation rather than asking your situation to fit the product. Here's what is strange about this level. The bank is now genuinely working for you. Not exclusively, the bank still has its own interests, its own products it wants you in, its own revenue targets. But the misalignment that defined your relationship with your bank for your entire adult life has largely resolved. A bank that makes money by helping you grow your wealth is incentivized to help you grow your wealth. This is different. This is the version of banking that used to exist only in movies or in stories about old money families. It is now your baseline. Level 7. $5 million to $25 million. Ultra high net worth. The bank pursues you. You didn't seek out your current banking relationship. They came to you. A managing director from the private bank called your assistant, not you, your assistant, and requested a brief introductory meeting. Not to pitch products, to understand your situation, to explore whether there might be a fit. The language was careful, respectful, slightly formal in a way that communicated something about who they thought they were talking to. You took the meeting because the referral came from someone you trusted. Now you have a team. Not a person, a team. A private banker who leads the relationship. An investment strategist who covers your portfolio. A credit specialist who structures your borrowing. A trust and estates officer who works on the generational transfer side of your wealth. They meet internally before they meet with you, to make sure every recommendation is coordinated and consistent. Their goal is to be your financial quarterback, the person, or in this case, the group of people, who sees the whole picture and makes sure all the pieces are aligned. At this level, the bank has real competition for your business. Every major private banking institution has a team tasked with identifying UHNW prospects and developing relationships that might, over years, convert into primary banking relationships. These teams are sophisticated, patient, and extremely well compensated. They attend the same charity events you attend. They know the same attorneys. They understand that getting your business might require 2 years of building trust before you're willing to move a single dollar. What they're competing over is not your deposit. It's your entire financial ecosystem, the investments, the borrowing, the trust structures, the next generation of your family. the eventual estate. A client at this level, fully captured across all their banking, investment, and lending needs, generates millions of dollars in revenue annually. The initial courtship cost is trivial by comparison. You choose your banking relationships the way you choose any other senior team member. Carefully, based on trust, based on track record, based on whether the person across the table is telling you what you want to hear or what you need to know. You've learned that these two things are not always the same. Level 8. $25 million to $100 million. The bank is a tool you use, not a relationship you have. At this level, the word bank has expanded beyond any single institution. You have a primary banking relationship, probably J.P. Morgan Private Bank or Goldman Sachs, or a similar bulge bracket name, that handles most of your day-to-day banking, investment management, and credit needs. But you also have accounts at 2 or 3 other institutions, maintained deliberately as leverage and insurance. If your primary bank's service slips, you can reallocate. If a competing institution offers better terms on a specific product, you take them and let your banker know that you did. The institutions know this. They compete accordingly. At $50 million in assets, banks don't just offer you products. They offer you access. Access to IPOs that aren't available to retail investors. Access to private credit deals that have minimum investment sizes above what most individual investors can meet. Access to real estate syndications, private equity co-investments, venture deals that come through the bank's institutional networks. You are not just a customer of the financial system. You are a participant in its inner circuits. Your family office, or the multi-family office you've joined, has taken over the oversight role. A team of professionals who work for you, not for any bank, who review every recommendation from every institution through the lens of your interests rather than the institution's revenue goals. The conflict of interest that has always existed in financial advice between what's best for you and what generates a commission has been largely designed out of your life by hiring people whose compensation is not tied to what you buy. Your bankers now come to you. Literally, they come to your office, sometimes to your home if the relationship is close enough. The concept of you going to a branch, the fluorescent lights, the rope queue, the numbered ticket, belongs to a different life. The bank is infrastructure. You use it the way you use electricity, reliably, at scale, without thinking much about it, until it becomes a problem, at which point someone else fixes it. Level 9. $100 million to $1 billion. You are not a client. You are a counterparty. The language shifts. In retail banking, the institution serves the customer. In private banking, the institution advises the client. At your level, the institution transacts with the counterparty. These are not cosmetic distinctions. They reflect a real change in the power structure of the relationship. You are worth $200 million. Your family office manages your wealth, coordinates your banking relationships, and employs professionals whose sole job is to ensure that the financial system works for you rather than the other way around. Banks compete vigorously for a piece of your business. They send senior partners, not relationship managers, not business development officers, senior partners to meet with your family office team. They prepare detailed presentations showing their capabilities. They offer economics, fee discounts, preferential rates, co-investment opportunities to win and retain a share of your allocation. When the market moves in ways that affect your holdings, you receive calls before the news breaks publicly, where legally permissible. Your bankers are monitoring positions and flagging developments at hours when retail customers are asleep and would not receive a call regardless. Your credit is essentially unlimited within practical boundaries. A portfolio of $200 million supports borrowing at enormous scale. You can take out $50 million against your holdings at an interest rate that feels almost offensively low. Below 3%, sometimes below 2%, depending on conditions and relationship. Because the collateral is ironclad and the bank's risk is minimal. The cost of capital available to you is the same cost of capital available to small corporations. Because in economic terms, you are functionally equivalent to one. The banking system, which was designed to extract small amounts from many people and allocate capital to productive uses, now serves you with a level of customization, responsiveness, and genuine alignment that was invisible at every previous level. Not because you are a better person, because you have enough capital that the institutions benefit from your success. Level 10. $1 billion and beyond. The bank is a relationship between equals. Sometimes you have the leverage. There is a phone that rings at J.P. Morgan and Goldman Sachs and a handful of other institutions when certain clients call. Not a hotline, not a priority queue. A specific person's phone. A senior managing director, a vice chairman, someone who has been in the business long enough that the relationship they have with you is personal and decades old and worth protecting in ways that a quarterly revenue target cannot fully capture. You are a billionaire. Your deposits, investments, and credit relationships at a single institution can represent hundreds of millions of dollars in business. Your referrals, the companies you send their way, the other wealthy individuals and family offices who listen when you speak about who manages your money, are worth significant additional revenue. Losing your business is not a line item problem. It is a PR problem, a culture problem, a "we need to understand what happened" problem that gets discussed at the management level. Banks don't make you wait anymore. Banks don't charge you fees, not because fees are waived, but because the concept of your relationship being structured around fees is categorically incorrect. You don't pay for accounts. You don't pay for wires. You don't pay maintenance fees. You occasionally pay management fees on investment portfolios, and those fees are negotiated, not listed, and they are considerably lower than the stated rate on the marketing sheet. When you want something unusual, a bridge loan structured in a specific way, access to a deal that's still in formation, a currency swap at better terms than the market rate, the bank assembles a team to figure out whether it can be done. The answer is very often yes. The limiting factor is no longer the bank's willingness to accommodate you. The limiting factor is regulatory reality and your own judgment about whether it makes sense. Here is something that surprises people who haven't seen it. Billionaires can also be badly served by banks. Not through negligence. No bank is negligent with a billion-dollar relationship, but through the structural tendency of every institution to prioritize its own product shelf, its own revenue targets, its own quarterly earnings. Even at this level, the most sophisticated private banking teams are working within an institution that has interests that don't always perfectly align with yours. The billionaires who navigate this best are the ones who never forgot what they learned at every earlier level. The bank is always, on some level, the bank. It is a tool with extraordinary capabilities and structural incentives that are not identical to yours. Use it with sophistication. Trust it with appropriate limits. Understand what it is and what it isn't. And if you're still at the beginning, if your balance is $340 and the overdraft fee just hit, understand this. Every person at level 10 started at level 1. The fees they paid were the same fees. The hold times were the same hold times. The impersonality, the invisibility, the sense that the institution you trusted with your money was quietly working against you, they felt that too. The system is not designed to help you climb, but it cannot stop you from climbing. And at every level you reach, you will understand something new about how the game works. Understanding the game is the first step to winning it. If this video changed how you think about banks and money, subscribe. We break down the real mechanics of wealth, financial systems, and what the fine print actually means for your life. Like this video, drop a comment about which level you're currently at, and we'll see you in the next one.